Hi, I'm Peter Epstein from AUWire.com. I'm at the Metals and Minerals Conference on May 14th in New York City. Right now I'm speaking with Mickey Fulp, who's the mercenary geologist. He's got a well-known following. Mickey, the markets are pretty tough. Can you talk a little bit about what kind of companies that you're interested in at this time?
The kinds of companies I like in a bear market are the same kinds of companies I really like in a bull market, with one caveat added. So let's kind of go through the criteria. I like companies with tight share structures, with insiders with plenty of skin in the game, so that their goals are the same as their other shareholders. I like people with experience. I like technical people at the top that have been successful in the business before. I would say someone that's bankrupted 3 companies I no longer consider an entrepreneur or a venture capitalist. And I generally pick advanced projects because I think that gives people the upside, the best upside for appreciation in stock price. We operate a model of double in 12 months or less, and you sell half, then you're playing with somebody else's money. You go find another company similarly. So we look at companies undervalued with respect to their peers. Well, everything's pretty much undervalued now. And the new caveat in this bear market would be cash at hand, cash at the bank, because in this market, it's very difficult to raise funds, and if you have to, you're going to be diluting your current shareholders. So we look for companies that are well cashed up or have alternative means of financing other than equity dilution.
Thank you. And I should add that Mickey is always personally invested in the companies that he follows.
That's
which
correct.
There are only 6 at this time.
Right.
Which is very interesting to me because many newsletter writers will follow 50. And you stick to just a few.
Well, I do, and I stick to a few companies because my business is really, I mean, I have a few people that help me on part-time basis, but it's the unholy trinity of me, myself, and I. So I can't cover more than 10 companies. I have a self-imposed limit of 10 companies to do a good enough job for those companies, and I run a sponsor model, so it's a free subscription service. Therefore, those companies pay to sponsor my website, so I'm beholden to them, and I'm, of course, financially involved and quite biased. But there's no way in the world I would cover 50 companies. It's hard enough for me to keep all the facts and figures and current progress straight. I currently cover only 6 because in this bear market, I can't really find 10 companies that meet my criteria, and I'm convinced they're going to be successful. I'm invested in probably 30 different juniors, but the ones that make the coverage list are kind of the cream of the crop. I consider my risk profile much higher than most of my retail subscribers, and so I'm only willing to put the best of the best out there.
Can you talk about a copper play that recently was in the news that you covered, Curis?
I do cover a copper company. It seems to be constantly in the news now, and that's Curis Resources, CUV on the Toronto Exchange, a near-term copper producer with money raised to build phase 1 of a mining facility, and I say mining in quotation marks. It's an ISR, in situ recovery copper project, meaning they basically inject dilute solutions down an injection hole and recover copper-bearing solutions from recovery wells. So it's currently trading at 70, 80 cents, 56 million shares currently outstanding, but just raised another $6 million with not very much dilution.
At a premium to market.
At quite a premium to market, raised at 88 cents, currently trading 70, 80 cent range. So, and it was done with a group of Chinese investors who obviously want to be involved in offtake a contract. The Company is fully funded right now through the building out of the first phase of the mine by Red Kite on an offtake contract. So I'm very bullish on their prospects. It's a Hunter Dickinson company. It has a pre-feasibility study, CapEx of less than $200 million, all in operating costs, life of mine of somewhere about $1.25 copper or less. We'll compare that to today's copper price of about $3.30, robustly economic.
Yes, and an NPV of 500 million or so?
I think the NPV is quite a bit above that in the pre-feasibility study with increased recoveries. Yeah, it's going to be a robustly economic copper deposit. Its IRR is 30%. More or less, and return of capital in 3 years or less. So it's hard to beat a mine like that.
Can you talk about the 2 picks you have that happen to be in Portugal?
Yeah, I covered 2 companies in Portugal. The first one is Avrupa Minerals. It's a prospect generator, really concentrated from north to south in Portugal, with tungsten plays in the north, one of the premier tungsten districts in the world, producing Panasqueira mines, one of the largest tungsten mines in the world. And then in southern Portugal, in what's called the Iberian Pyrite Belt, they have a joint venture with Antofagasta Minerals for copper, zinc, massive sulfides, and it's a producing district, so Antofagasta is a good partner. They pay for the entire play. In the northern part of Portugal, this segues to the other company I cover, which is Blackheath Resources, and it has a joint venture on Avrupa's Kovash tungsten play. They've just picked up 2 other past-producing tungsten mines. Kovash is a past-producing tungsten mine. They are on the road to acquisition of a couple of more projects in Portugal. And what I really like this company, tightly held share structure, about 17.5 million shares outstanding.
Which one is that one?
Blackheath Resources, BHR, on the Venture Exchange. What really attracts me about this company is not only the tight share structure, but the people involved. These are the same people that did Primary Metals on the London Stock Exchange in the early 2000s, sold the Panasqueira mine, currently one of the world's top tungsten producers, to Sojitz, a Japanese conglomerate, industrial conglomerate. That stock went from 15 cents to $3.65 as a sale price. So the management of Blackheath are the same people that did Primary Metals. My opinion is they've done it once, they have a good chance of doing it again.
So can you tell us quickly about your newest pick?
My newest stock pick came out about a week ago, is Gold Royalties Corp. And I've studied the royalty business, and I felt a need to kind of get out of my comfort zone a little bit and find something that was a little different than I've done before. And so Gold Royalties is a relatively new royalty company, have a currently cash flow producing royalty with Metnor's Bachelor Lake mine in the Abitibi of Quebec. The reason I picked them, again, a tight share structure, 20.5 million shares outstanding. Management, insiders, family, and friends own the majority of that stock. So, you know, it has little liquidity, as a lot of these stocks do in this time. They fill a niche within the royalty business that has not really been filled before, and that's a smaller scale royalty company that can take on royalties on smaller projects. So they have a strategic partner with industry giant Franco-Nevada, kind of the king of the royalty companies, where they can funnel projects back and forth for respective 50% interest. So they have that. They have an alliance with Callinan Royalties on a couple of non-producing but perhaps soon producing royalty. So it looks to me like this is a way for me to play a new portion of the junior sector with a lower risk profile and a longer term outlook than my really speculative junior stock. So I'm using this kind of as a hedge to generate cash flow and dividends, et cetera. So I would encourage listeners to take a look at Gold Royalties Corp. to GRO on the Venture Exchange.
Thanks very much for your time, Mickey. Appreciate it.
Appreciate it, Peter. Thank you.